Gold just hit $5,220 an ounce. The bond market is cracking under pressure. Oil jumped 13% in a single session. And BlackRock, well, BlackRock might be engineering the greatest wealth transfer in modern history right under our noses. Meanwhile, for the first time since the 1930s, more people are leaving the United States than entering it. And uranium, the forgotten fuel, is suddenly the most important commodity nobody's watching. Stay with me on this one, because the last story today connects everything you're about to hear in a way that, honestly, I didn't fully see coming until I put it all together. Before we dive in, if you find value in what we do here, I'm going to ask you something personal. Hit that like button, subscribe if you haven't, and if you're in a position to do it, consider sponsoring this channel or using the Super Thanks feature right below this video. I say this because what we do here takes real work, real research, real fact-checking. We don't run with rumors. We don't recycle clickbait. Every number you hear me quote, I've verified. And that kind of journalism, independent journalism, it survives only because people like you choose to support it. So thank you, truly. Now stick around, because the most important part of today's episode, I've saved it for the very end. Let's start where the money is screaming loudest. Gold surged to $5,220 per ounce. Let that number sit for a moment. Oil spiked above $82 a barrel, up 13%. The S&P 500, the Dow, the Nasdaq, all opened down more than 1%. Crypto got hammered, Bitcoin down 6%, Ethereum down 7%. The total crypto market capitalization dropped from $4 trillion to $2.5 trillion, and Nvidia, after posting what should have been a stellar earnings report, lost 4%. Palantir, with record-breaking revenue numbers, fell 17%. The dollar itself weakened 13% over 12 months. Now here's the thing that should keep you up at night. When everything falls at once, stocks, crypto, tech darlings, and the only things going up are gold and oil, that's not a rotation. That's a signal. The market is telling you something, and what it's telling you is risk is no longer being priced correctly, and the smart money already knows it. But wait, it gets more interesting. And if you think the gold move is just about Iran, you're only seeing half the picture. The immediate trigger was the military strikes on Iran. And look, Iran isn't just another geopolitical headline. Iran controls roughly 5% of global oil production. But the real leverage, the real choke point, is the Strait of Hormuz, about 20% of the world's oil and up to 30% of global liquefied natural gas flows through that narrow passage. When Iran's Revolutionary Guard got on the radio and told ships they couldn't pass, more than 150 tankers stopped dead in the water. Not a single American vessel was permitted into the Persian Gulf. And then, 12 hours later, Iran reopened the strait. Quote, until further notice. You know why? Because 90% of Iran's oil goes to China. 12 hours of blockade was enough to remember that you can't fund a war if you cut off your own revenue stream. That's not strategy. That's a reality check delivered by economics. But here's what matters for your portfolio. According to Bloomberg Economics, the range of scenarios looks like this. A ceasefire brings oil back to $65. A full closure of Hormuz pushes it to $108. We're somewhere in between right now, and nobody, not the Pentagon, not Wall Street, not Tehran, knows which way this tips next. Now let me tell you what happened to the so-called safe havens, because this part is critical and almost nobody is talking about it. Treasury bonds, the thing your financial advisor calls the safest asset in the world, initially rallied when the Iran news broke. That's the textbook move, right? Crisis hits, money flows into treasuries. But then something unusual happened. Treasuries reversed, prices fell, yields rose. Traders started realizing that the inflationary shock from higher oil prices could actually destroy the very thing that makes bonds safe in the first place. When even the quiet harbor starts taking on water, you have to ask yourself a very uncomfortable question. Is there any safe place left for your money? For stocks, it means pressure on corporate profits and a collapse in risk appetite. For currencies, a temporarily stronger dollar as a panic reflex, but a structurally weaker one underneath. For central banks, this is a nightmare. They were already struggling with inflation. Now you add an energy shock on top of it, and every rate decision becomes twice as dangerous. Wall Street strategists, to their credit, are telling people not to panic. Don't change your forecasts based on emotion, they say. Fine. But let me share a few numbers that should make you pay very close attention. Institutional passive equity funds have begun outflows. Net bullish sentiment dropped to nearly Thanksgiving levels. The S&P 500 price-to-earnings ratio came down from its peak, but still sits at around 25 times, well above the historical average of 19. The energy sector looks attractive on valuation, but the real sleeper? Healthcare. Pharma and medical equipment have historically shown resilience when oil prices spike. Historically, geopolitical shocks produce sharp moves that eventually reverse. But historically is cold comfort when tankers are sitting idle in a strait that controls a fifth of the world's energy. And here's where I need you to lean in, because this next part connects the dots most people are missing entirely. Precious metals experts are now warning that artificial intelligence could become the central mechanism in the largest wealth transfer in human history, not because of the technology itself, but because of what happens to the economy around it. Here's the sequence, and I want you to follow it carefully. AI replaces up to 95% of existing jobs. That's not my number. That's coming from leading industry specialists. People lose income. They can't pay mortgages. They can't pay rent. Real estate prices collapse. And then, and this is the critical part, companies like BlackRock swoop in and buy those assets for pennies on the dollar. After that, universal basic income gets introduced, asset prices recover, but ownership has already changed hands. The middle class had the house, now the corporation has the house, and you're paying a subscription to live in it. And by the way, the subscription economy is already here. Clothes, food, toothbrushes, media, everything is shifting from ownership to access. This echoes that line from the World Economic Forum that made people so uncomfortable. By 2030, you will own nothing and you will be happy. Without ownership, a person becomes completely dependent on the system. Social credit scores, central bank digital currencies, zero upward mobility. The parallel to the Great Depression is striking. Back then, they massively raised property taxes, forcing people to sell assets for nothing. The mechanism was different, but the result was the same. Wealth moved from the many to the few. And if you think this is just theory, consider this. A platform called Rent a Human Now has more than 500,000 people registered to perform tasks assigned by AI agents. Delivering flowers, testing products, the AI agents hire humans and pay them in cryptocurrency, humans working for machines which work for corporations which own everything. When an AI agent hires a person to deliver flowers and pays them in crypto, that's not science fiction anymore. That's a Tuesday. President Trump has said he intends to ban BlackRock and similar companies from buying private homes. But that fits neatly into the narrative of everything will be fine, the kind of reassurance designed to keep people calm right up until the rug gets pulled. Gold and silver, according to these analysts, represent the last line of financial autonomy, a physical asset that cannot be switched off, that cannot be devalued through an algorithm. And maybe that's why gold just crossed $5,200. If you're still with me, and I hope you are, hit subscribe right now. Drop a comment with your take on this, because I want to hear what you think. Are we watching the setup for something massive, or am I reading too much into the patterns? Let me know. Now, while everyone's eyes are on oil and gold, there's a commodity story building in the background that almost nobody is paying attention to, and it could reshape the global energy map. Uranium. While Germany shut down its nuclear power plants, the rest of the world is racing toward a nuclear renaissance. More than 60 reactors are currently under construction. Another 100 are on the drawing board. By 2050, nuclear energy output is expected to nearly double, and the demand for uranium is exploding. Here's where it gets geopolitically interesting. Kazakhstan controls 40% of global uranium mining. Canada has 23%. But the real winner, the entity that benefits most from this nuclear boom, is Russia. Russia holds 43% of the global enrichment market and supplies fuel to 73 reactors worldwide. A decade of low uranium prices killed investment in new mines. A structural deficit is now on the horizon. So let me get this straight. Germany pays premium prices for gas and wind power, while Russia earns money from uranium for the entire planet. Energy independence, it turns out, means being dependent on the very country you swore you'd never depend on again. That irony isn't lost on anyone who's been paying attention. And now the story I saved for last, because this one, I think, tells you more about where things are heading than any chart or market indicator ever could. For the first time since the 1930s, more people left the United States than entered it. According to the Wall Street Journal, in 2025, nearly 3 million people either emigrated or were deported. Only 2.6 million arrived. The difference, roughly 150,000 people, that's a net outflow. That hasn't happened in almost a century. century. Many of them moved to Europe. The Wall Street Journal put it bluntly, "The new American dream is to leave America." Among those who left, actor George Clooney, who became a French citizen. Now I want you to sit with that for a moment. The 1930s. The last time this happened was during the Great Depression, the same era we just compared to the current wealth transfer dynamic, the same era when ordinary people were forced out of their assets, out of their homes, out of their country. And here we are, watching it happen again, with different mechanisms but eerily familiar patterns. When the American dream migrates out of America, that's not irony, that's demographic statistics. And demographic statistics, unlike political promises, don't lie. So here's what I want to leave you with. Gold is screaming. Oil is unstable. Bonds are cracking. The subscription economy is replacing ownership. AI is reshaping who works and who profits. Uranium is the quiet bet nobody's making yet. And people, real people, are voting with their feet, leaving the country that once symbolized opportunity for the entire world. The question isn't whether things are changing. They're changing right now, in real time, while most people scroll past it. The question is whether you see it happening and what you're going to do about it. Every episode you watch here exists because someone chose to hit that like button, leave a comment, share a thought. That's not a small thing. YouTube's algorithm decides who sees this content based on engagement. So when you like this video or drop a comment below, you're literally helping other people find it. You're expanding the reach of independent analysis that took hours of research, cross-referencing, and verification to produce. If you want to go further, sponsorship or super thanks directly funds the work that keeps this channel free from corporate influence. No advertisers telling us what to say, no sponsors shaping the narrative, just research, facts, and honest analysis made possible by people who believe that matters. Subscribe if you haven't. Share this with someone who needs to hear it. And thank you sincerely for being part of what we're building here. This community, your community, is the reason this work continues.